Vora is with us, Chief Investment Officer at Trust Mutual Fund. Mihir, good morning. Good to have you with us here this Monday morning. It's been, tough since that top in September, those highs in September. Frontline indices down over 10%. How have you been navigating this, and what is the advice for those who are watching, Mihir? The point is when we say, well, go by the dip, you've got to have created cash to be able to go by the dip. Otherwise, you're just sort of you're seeing prices fall, portfolios under pressure. And I reckon some of that is playing out as we speak. What's your sense?
Good morning, Prashant. Always a pleasure. So, Prashant, I think there is cash on the sidelines because last month, again, was a record month for mutual fund inflows. And I'm assuming that the other inflows continue in the insurance, EPF, NPS space. So there is institutional cash definitely out there. If you look at the net buying numbers, they're not that large. So there is cash on the sidelines, definitely. The markets are at crucial support levels. A lot of the indices, the mid-cap, the Nifty, etc., have come very close to that 200 DMA, which typically tends to be a big support unless things are completely awry. But I don't think things are completely all right. I think what's happening is that there is a little bit of a divergence between the Nifty, which is the most popular index that is being followed, and probably the broader indices. So if you look at the Nifty, because of a lot of global sectors and some financials in the MIT, we have seen earnings downgrades, and obviously that did lead to a correction in the Nifty. But on the broader market fronts, the results have been more, I would say mixed rather than negative. So for the small cap indices or for the NSE 500, really we haven't seen earnings cuts. So I think maybe the Nifty is becoming a little bit more globally exposed in terms of the behavior. And the domestic, more domestic looking indices are doing quite well. You're asking what we are doing. We are quite lucky that we launched a small cap fund last month, and we are in the process of deploying. So I'm not complaining for the deployment of that fund.
Right. So what sectors are you backing in the small cap? What's looking good after this fall?
The same ones, Mangalam, that we discussed, the domestic themes look good. I'm still positive on premium consumption, financialization, savings, all the physical asset creation themes like, capital goods, construction, real estate, infrastructure. I don't think too much has changed, frankly speaking, as far as the themes are concerned. I think what's also happened is Indian markets obviously did very well. We are looking at the outflows that we've seen in October and November, which is huge. There's no, doubting that. There's no debating the fact. But we tend to forget the fact that June, July, August, September actually saw more inflows than the outflows that we've seen so far in October, November. So India did receive a disproportionate amount of money. Maybe it was passive funds, maybe it was the general trade, the global trade. But because we received disproportionate amount, we are probably losing that, that big of a fraud. So I don't think it's a vote against India globally. Money is being withdrawn from emerging market funds, from global funds into US-based funds, which is natural. But I think this is, a one-time knee-jerk effect that's happening because of the US election results. Because if the Democrats were in power, the status quo would have been a weak dollar, record deficits, gold, etc., going on, inflation going high. But because now it's the Republican Trump in play, many of those trades are being unwound. So it's not necessary that the dollar will end up being stronger 1 year down the line, 2 years down the line. But the unwinding of trades, which was pro weak dollar, is probably what we are seeing. So my guess is that typically fund managers, hedge fund managers, etc., don't want to keep positions into the year. So as we end November, these trades should come to an end, and we should kind of see less volatility.
All right. Hi, Mihir. Good morning and good to see you. And Mihir, the past quarter was the most disappointing in multiple quarters in terms of earnings. Do you think quarter 3 actually could be a pleasant surprise? I ask you this because the government spending has picked up substantially. And also, if I look at the various collection of GST collections as well, have been fairly strong. So there are indicators that actually that slowdown could have been transitory in nature. Would you back that point and believe that earnings could pick up from here on?
Certainly, you hit the nail on the head. Government spending was very weak, and that can be attributed to the election year impact. In fact, I just saw a report from ICICI Securities. It does compare how spending slowed down in 2020 and then in the first half, and then in the second half, it picked up sharply. And the argument being made is that it typically happens in an election year. So there is a very good chance that you might see very accelerated government spending in the second half. The other potential positive is that before Diwali and during Diwali, we were seeing a lot of negative commentary on secondary sales or other primary sales for a lot of consumer durables, etc. But that negative commentary seems to be receding, and people are incrementally beginning to talk about the fact maybe it's not so bad. Things have been okay in terms of primary sales. So fingers crossed with government spending and the primary sales coming up. I think we should actually have a good second half. Yes.
It'll be very interesting to see whether that gets reflected in the markets or not, because right now every bit of flatness is being sold into. We're at the low point of trade for the Nifty, has broken below that 23,500 mark as well, and this decline has been led by the IT stocks. So if you pull up the IT index, you'll have the IT index at the low point of trade, in fact down by almost 2% led lower by some of the biggest movers. We have Infosys, Wipro, TCS, all the heavyweights currently at the low point of trade. And it's not just the IT index. We have the Nifty Bank too, which is just below the flat line right now, has given up some of its opening up moves, if one were to call that a flattish sort of move that we saw. And all of that is reflected in the advanced decline too. When we started trade, we had more stocks advancing than the number of stocks which were declining. That lines have now flipped. We have around 1,500 stocks in the red. Early moments in the day so far, but 1,500 stocks in the red for just about 800 in the green itself. And market seems to be seeing sell-off at every sort of up move that we're seeing, or even a flattish sort of opportunity.
No, I mean, and I think we are slightly just below that 200-day moving average as well. Although this is still the first 15 minutes, inside of the first 15 minutes of trade that we're seeing. By the way, Mangalam was talking about Honasa. Honasa has now fallen below its IPO price. So that's a sort of been a Q2, of course, has been a disaster. But the stock, of course, also taking it really on the chin.
More than the Q2 being a disaster, the problem is that there is no visibility for the next couple of quarters. And when the consumer sector anyway was weak, more on the street were betting on Honasa's outperformance when it came to growth. Because time and again, the management has been talking about, growing at least 2x the pace of the industry. And that's why, despite lower margins, the street gave it that long arm, believing that there is growth out here. But now two key problems. One, distribution related problem. That wouldn't be as much a problem had growth come by in its mother brand. The fact that the mother brand is not doing too well, which is Mama Earth itself, and that itself would take a couple of quarters to come back, or the management would rework their strategies around that, along with a few quarters of distribution led efficiencies to come by as well. So for the next 2 to 3 quarters, the game for Honasa is pushed back, and if and when growth comes by is when the street would start taking a relook at Honasa, because up until now, everyone was betting on growth. Growth has been put into abeyance for the next couple of quarters.
Absolutely. And, we'll sort of talk more about this with Mangalam as we go along. Well, I think we can wrap up our... Okay, I think Mihir is still with us. Mihir, we have the Muthoot management joining us in just 2 minutes. I saw an upgrade, from Morgan Stanley this morning. Stocks up, doing well, 4-5%. They've upped their sort of gold loan growth guidance as well. And of course, at the margin, I think it is helped by the fact that some of the, the regulator has come down hard on some of the other areas, unsecured lending and so on and so forth, fintech, etc. I mean, all those things have gone down. Just any thoughts and anything you'd like us to ask the management?
No, not really. Nothing stock specific, frankly. But I think typically what does happen is that when you have a little bit of a crackdown on the unsecured part, the secured part tends to benefit. So I guess a lot of these secured lenders are in for some bump up because of that.
Right, Mihir, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here on the program, and thanks indeed. So that is Mihir Vora, Trust Mutual Fund, with his perspective. The market